So, welcome again, everybody, to this edition of Wednesday live session. A session I've created to educate as many as I can in this craft of chatting. You know, many of us have studied the theories as I've explained in this chat in my YouTube channel, or the courses some of you have taken, but there is a big difference between theory and practice. All right. So the essence of this session is to see how best I can apply those theoretical guidelines in practical terms, so that all students, mentees who are following the same system can easily adapt to it, and independently trade on their own. All right. So as you know, I always love us to start from DXY. And last week, I told you something concerning DXY. Then the chart was here, right here, right here. And I said to you that what you will use to time market volume is DXY, okay? And I also made a forecast that this move was going to come on DXY. And when this move starts coming on DXY, when you go to other pair, you are going to see a very good and decent move in the market. And I think we can also do some illustration of this move, how it affected all the markets. Look at it, this move. We called this move yesterday. We did not trade DXY, but we traded the Euro USD. All right, my signal channel, we traded Euro USD. When that move was happening in DXY, we took this sell, need sell to the downside on Euro USD. Even though it retraced and we couldn't get more than 30 pips at the end of the day, no problem. Then let's look at GBP JPY. You see, GBP this week has been consolidating, but when that move was happening on DXY, you were having this move on GBP JPY. Let's see another pair. When that move was happening on DXY, you have this move on USD JPY. Let's look at any non-USD related pair. When that move was happening, guys, on DXY, this move was happening on NZD card. Can you see? So is a sign that volume has been introduced to the market when you see movement on DXY. Okay, even though the move may not be big, you're going to see it across board, guys. You're going to see it across board. You're going to see it on different pairs. Just name it, you will see. If the pair does not have a good average daily range, you see that it will make a small push. Just because on this DXY here, you were able to get this move to the upside, this sharp move to the upside, you will see it across board. All the pairs will have that push. All right. But right now, nothing is going to work in the entire market. Nothing is going to work. Why? Because the push is done. Then the next thing is consolidation. Until this consolidation is over and we see the next push, that's when the next move will come to the market. If we don't see how this push is corrected, what I mean is this: we want to see whether this structure, W, X, and then Y, if this structure will stand, then DXY, nothing will happen in the market until this move is over. This is only when this move is over and you are having this bigger move for this one. All right, this wave. When this wave is appearing here, that is only time you are going to have a good movement in the market. For now, as long as this is coming down to the downside. All right. As long as if this is correcting, watch me. If this is correcting to this level for a push-up, this push-up, guys, is going to create a movement in the market. You're going to have many setup behave. All right. Right now, I'm expecting euro dollar to still go down. Okay. If that move to the upside happens, then you are also going to have euro dollar make this move. This correction will also break down, because my anticipation before was for euro dollar to come to this level when we were selling at the top yesterday. All right. But right now, if DXY makes a corrective structure to push up to break this top, okay, then you also expect that euro dollar, okay, euro dollar is going to also make a corrective structure up and push down, because euro dollar is does exact opposite of DXY. As you know, as you learn in your basic course, that euro constitute about 52 to 53% of the total basket that makes a basket of currencies that make up the DXY. So what I will expect right now, seeing what is going on in DXY, I will expect that this impulsive leg, remember, we're ending the impulse for here, not here. Here and not here. Why? Watch. We are ending the impulse here and not here. Why? This is the orthodox bottom. I always mention orthodox bottom. Okay. So if you take that fib right here, you have 50 to 61.8. I was thinking before that we had enough liquidity in the system. You know, if we had enough liquidity in the system, honestly, euro dollar does not need to retrace. Euro dollar does not need to retrace before it keeps flushing down to the downside. But because there's no volume, it just made a little push, and now it wants to correct. Can you see? It wants to correct. So, and no problem, it can correct, but we should be able to define, you know, the correction we have seen after we have spotted the impulse. Where is the impulse? From this level to this level. Where is 50 to 61.8? This level. All right. So let's remove the fib. Then another thing is that we must be able to define the corrective structure. Right now, we cannot define the corrective structure that is before us. We can't define it. This one has no definition. Okay, that's one thing that is very, very important that we must take note of. This, as it is right now, does not have any definition of corrective structure. Can't define it. We don't know what is happening here. But if it continues to go down this way, fine. Okay, it's allowed. But then if it has to correct based on what we saw on DSY, then what we would love to see is a clear definition of this structure. Let it push up. Maybe push to break this top first, and then give you a correction, and then a push up. Can you see that you can also spot a supply zone on this impulse right here? Where is the supply zone? All you just ask yourself is that along the impulse, market like this. Market like this. Remember, what I'm trying to do here is to make you an independent chart analyst. Okay, that's what we just do here. Just be an independent chart analyst. I want each and every one of you to be able to see the chart and interpret it the best way it should be. You ask yourself, along this impulse, where is the biggest candle? Right here. This is the biggest candle. That's the first thing you ask yourself. The next question you're going to ask yourself right now is that, where is the position of this biggest, you know, candle along the impulse? Where is the position? Is it at the zone of your structural area? And anytime you hear me mention structural area, I mean the fib level. The fib level. Let's take the fib again, guys. Let's take the fib again from this impulse, from this top to this bottom. Where is 50 to 61.8 here? Is it corresponding to the level of that fib? Is this what do you call it, candlestick, the biggest candlestick? Does it correspond to the fib level? Yes. Then that is one thing you have to identify. Another thing you have to identify is to spot the exact supply zone along that impulse. Where is the exact supply zone? Come to that big candle that is on the along the structural zone. Then look at the candle before it. Look at where it stopped here. Boom. Look at the candle after it. Look at where it stopped here. Boom. This is our supply zone. This is our supply zone. So all we have to do right now is to wait to see if this market can give us corrective structure here and push up. Once you push up and get to this structural area, all we need to do is that when we take the fib of this impulse, if we are able to get entry here, remember, here must be within London or New York session. If it's getting close to New York session, don't take it again, because it can invalidate the structure and even go to break this top, because you have tomorrow morning to, for inducement, the next day morning inducement. So to avoid that, this structure must complete within the middle of market liquidity. All right, it must complete within, session that you are sure that you are going to get enough volume to push it to the downside. So once it happens like that, okay, we are getting a sell here. What you just do is your stop loss will be above 78. That's what I do. I don't place my stop loss anyhow. If you hit it, fine. Above 78. Then from there, you take the move to the downside. Is that okay now? So that's how I want to see euro dollar. That's how I want to see euro dollar, because the reason why I'm seeing euro dollar that way is that even though I was expecting this corrective structure, I'm expecting this corrective structure, 3 waves up, corrective structure here, 3 waves up. This is what I'm expecting, that if you get to this supply area, that's zigzag in the form of 3-wave structure. Then if you take a fib of this left to the downside, you see that here is exactly 78%. So I'm expecting overall, euro dollar to come to this level and make a move to the downside. But it's not ready to go there yet, because of the current structure that is developing. You can see a lot of consolidation. This is end of the week, phenomenon, and this is the end of a quarter phenomenon. Of course, you see that this is June, which is the end of a second quarter. Not only the end of a second quarter, it is the end of the first half of the year. Okay, first half of the year. And not only that, this week is now the week, the last week of the first quarter, of the second quarter, and of the first half of the year. So usually, companies, they review, they make decision, they wait to, they determine the next line of action. So meeting here and there, companies declare interim dividends, and so on and so forth. So because of all this happening, there are usually low volume in the market, because decision has to be concluded upon before investors will know the next line of action. They have to review, different economies, the different central banks, what policy measure will they take, which policy measure have they taken in the first half of the year, how has it affected their investment portfolio, then what next action are they likely to take, and how is it going to impact on their business? Is it positively or negatively? Then what measure will they put in place to mitigate risk? So while all these are going on, all right, there is no trading. And these are the people that create volume in the market. It is their money that creates volume in the market. You require as much as 10,000 lot size, guys. 10,000 lot size to move this market by only 1 pip. Hear me right. You need 10,000 lot size to move the market by 1 pip. So can you imagine now the magnitude of fund that has to be pumped in for this market to move? Do you know the magnitude of fund that was pumped in for this move to happen on euro dollar? Is a massive, amount of money. And that is why I always told you that whenever you are trading, you should try and look for strong impulse, because it is a strong impulse. The stronger the impulse, the greater the volume that was pumped in. All right. So it is such impulse that have guarantee of, having a reaction at 50 to 61.8, or having a reaction at 78% if it's a 78% retracement, if it's a zigzag or a flat corrective structure. Do you understand now? So, but this week, honestly, there's going to be very extremely low volume. And when there is low volume, market can go anywhere, because it's not going to have a definitive direction. It's not going to have it. It can go anywhere. So when you expect that, oh, there's impulse, there's correction, there's supposed to be continuation, you see that there will be continuation truly, but before you know what's going on, it will move to the upside again, because this market at the moment does not have volume. The people, the investors that are supposed to pump volume to the market, they are not there. And when their money is not there, market is going to be left alone. So it's left really in the hand of the retail traders, who love to push it up, push it down, push it up, push it down. That's the business. Look at it here. This phenomenon you see here is a retail trader phenomenon. No big player operated here, guys. No big players operated here. All was done by retail traders alone. All our money combined together was one. Look at it. Push up, push down, push up, push down, push up, push down. This is retail trader phenomenon. Maybe if they now decide to face one direction, you have this push up. But I can tell you, confidently that no big player operated here. That's why you see all this consolidation happening here. But when they want to come into the market, they look at the present price. They say, oh, there is fear level. What do I mean by fear level? That is the area where retail traders have participated, pushing the market over a range of prices. Okay, so when they want to get in, if the interest is to buy, they'll push the market down. Okay, when they engineer the market to go down, it takes order from here. This price is better for them than this price we have been struggling to buy and sell, buy and sell, buy and sell for quite some times. Okay, so they take order from here for psychological area, let's say 1.0400. Can you see? From there, to make a move to the upside. Do you now see why I want to buy euro dollar, but it has not got to the level I want to buy it? Okay, so for us to buy here, there must first be a seller here, seller to push it down. Then from there, we look for buy opportunity to push it up. But ultimately, we're expecting a sell opportunity in euro after it has formed this three-wave structure. Impulse, 3 waves up, 3 waves down, 3 waves up. From here, make a move to the downside, but it's not just ready. Okay, ever since I saw this, I knew we are in for trouble last week and this week. Okay, it takes, it takes courage, it takes endurance, for for me to return maybe is it 80 pips, is it 80 pips now or 90 pips profit. Last week it was serious. This week is even, a big difficult, because you do analysis and what you think should ordinarily continue to proceed in your direction will just turn back. You can imagine a situation where we had the Euro JPY. I'm going to show you, let's say in 15 minutes so that you can see it clearer. In 1 second, it pulls down by 40 pips or 50 pips in 1 second and went back up again. It was then I made up my mind that I can't be a part of this game. I can't. Look at it. Look at it. Ordinarily, guys, I've done the top-down analysis. Don't worry about that one. Okay, let's just continue from here. Okay, so, okay, let's go back to daily. Let's go back to daily. Ordinarily, we are expecting a correction. Okay, we're expecting a corrective structure on Euro JPY. We're expecting the corrective structure, okay, at least to this level before we can push to the upside. I think you get it at this level. But then you see that here you have a selling pressure. It's a beautiful selling pressure, guys. Everything that was buying was totally consumed. It was totally, consumed by excess supply. There was excess supply over demand here. And that gives me a candlestick that matter. Okay. So with that, I need to just step down to 1 hour time frame to see what is happening. I must see an impulse in 1 hour time frame. Okay. So where is the impulse in 1 hour time frame? Look at the impulse here. Okay. Look at the impulse here, which is stronger than what you have here. It's not stronger. If you want to know whether it's stronger or not, you have to count the candles. Look at this big one to the downside. Only this big one is covered by 1, 2, 3, 4, 5 candles. 5 hours to make these 5 candles, 1 hour to make this boom to the downside. So this push to the downside is stronger. All right, it's stronger. So in that case, the next thing is I will have to look at the corrective structure. Okay, so I have looked at corrective structure yesterday, and I've seen 3 waves up here. I've seen 3 waves up here, and when I saw this 3 wave down, I knew 3 waves up is coming. That's what you see here: 1, 2, and 3. So after getting to this place, you now have W, X, and Y. Corrective structure is over. Okay, now as corrective structure is over in the form of zigzag, WXY in form of zigzag, all we need to do right now, whenever it happens like this, you can see that correction is almost breaking the top of the impulse, almost. And of course, there's a rule that corrections should not break the start of the impulse. Can you see the rule well respected? This correction did not break the top of the beginning of this impulse. Okay, so having seen it that way, all we have to wait for is to see an impulsive move to the downside, then correction, and then we proceed. So how did the correction take place, guys? I want you to see it. Okay, so when I take decision, I'm taking it based on what is before me. You have the impulse. Look at the correction: 1, 2, and 3. This is a running flat, guys. Okay, and after this is completed, all you need to have is a move to the downside. That's all. There's nothing. If market is behaving the right way, this is it. This analysis is top class, and on a good day, this market has no business coming back to the upside. This is it. And then I didn't get the trade opportunity on time, but even after getting it around this level, I know that putting my stop loss here is cool, because after breaking this range, I don't expect by any means the market to come back. So I expect a move to the downside. I was happy at least 100 to 150 pips is going to be guaranteed on this trade, because all the corrective structure is well defined. That's what you require. You must be able to appropriately define your corrective structure, which we have done. You must ensure that the corrective structure gets to 78 if it is a zigzag, which is even 99 to 100%, which is okay. And then after corrective structure is over, we have seen an impulsive leg to the downside, which is this one. Then after this impulse, we did not still enter. We needed to see correction. What did we see? We saw this corrective structure here. A, B, and C. Okay, this is a running flat. And after that, you see a move to the downside. That's what we need, guys, this move to the downside. So if I had seen this trade set up on time, this way I would have caught my entry at 143.46 or so, but I didn't see it on time. But even after seeing it down here, I saw that because we have a complete corrective structure here, we need to just move to the downside. Okay, and then what did the pair do? You can see as soon as we enter, just instead of it to continue to push up and to push down, what did it do? Look at a massive candle to the upside. Can you see? Massive candle to the downside. Within a second, guys, let me measure the number of pips to the upside. Within a second, 60 pips to the upside within a second. As I was just looking, what's going on? What's happening? You know, look at how this market moves to the downside. How many pips to the downside? 46 pips. And this 46 pips to the downside happened in just 1 second. I was watching the market. I saw it push very hard to the downside. I said, yes, this is what I'm expecting. Why are you going up? Before I said, what's going on? It has consumed all the selling pressure, consumed everything to the upside. I said, okay, if that's the case, then I do not expect that it should break this level of impulse, because if we have started a move down here and we have this corrective structure, and from there we have this push down. If market should behave normal, there's no way it should break the top of this level. But can you see? It has broken the top of that level. So what we have to anticipate right now is a situation where you have corrective structure here, you have a push up, then you have a push down. All right. So this push up, this corrective structure here and a push up here, will not even still guarantee an entry until you have a final push down. Probably this final push down is going to be very hard and very smooth one. Okay, that is the one that we can logically take a fib, determine the corrective structure, you know, define it. When it is okay by 50 to 61.8, we take a move to the downside. So that is it on Euro JPY. But for now, I'm not trading. I'm not going to trade the market again this week. It's going to be next week, guys. And I've advised those that care to listen to just leave the market alone, because right now there's no volume to drive this market. And as long as there's no volume to drive the market, even if your setup is perfect and there is no volume to drive it, it will be consolidating. Okay, it will be consolidating. And there's nothing you want to do with consolidation. There's nothing you want to do. Okay, so right now, let's look at Euro GBP. Euro GBP. Okay, structurally, what we want for Euro GBP is for this structure to be a corrective structure. Can you see? 1, 2, and 3. This is a corrective structure, expanded flat. We want this move to the downside. And this move to the downside will come, break this low. It has not broken it for a very long time, but this time around, available fundamental before us shows that it's going to break it to the downside, probably coming to take liquidity at this demand this time around. Euro GBP. Of course, you know, fundamentally, Euro is weaker than GBP. So having a technical setup that reflects, you know, the fundamental before us is a great, you know, a great thing to happen. You understand now? So if that's the case, looking at this market like this, what we wanted to see, we had seen it already. And what's that? If we come to daily, you see that we did not see engulfing, but at least we see a railroad track. Look at it here. Cool. Can you see? As soon as we got this, all we have to do is to go back to daily 1 hour time frame and see the structure that we can make out of it. The structure we can make out of it. We must see impulse. Okay, once you see that pattern on daily, you must see impulse on 1 hour, and that's the impulse there on 1 hour. Can you see? That's the impulse there on 1 hour. So if you take the fib of this impulse on 1 hour, okay, from this level to this level, okay, so this is 50 to 61.8, and this is 78. Why do I project that this market will get to 78? And if I miss this trade, I'm not going to be happy. I'm not going to be happy because I've been waiting for it, you know, right from when it was here. I said this market is coming back to the upside here, and here we're going to take it together to the downside. Okay, so why am I suggesting that it will get to about 0.8680? 0.8680. Why am I suggesting so? Because I am seeing the nature of the corrective structure. Some of you, when you see an impulse, let me reiterate this fact again. Let me reiterate it. When you see an impulse like this, they have taught you from elementary forex that just take a fib and you now say, okay, this is a 50, this is a golden ratio, 61.8. What is the price there? 0.8414. You now take your two, you now set what do we call it? You now set your sell limit at that spot. Sell limit, stop loss here, sell limit. You do it like this. It's wrong. You don't do it that way. You have not seen, fib is not used, you know, fib is not just used to get the level of retracement in a pair. No. It is the corrective structure that will determine the retracement level that you are expecting. It is the corrective structure. So if the corrective structure turn out to be something like this, then 50% is just adequate. Even in some scenarios, 38% is okay. Let me show you an example in Euro JPY. I'll show you an example in Euro JPY where only 38% is just okay. Look at it. Look at the impulse that you have here. Look at the impulse. Okay, look at the correction 1, 2, and 3, and then continuation. Take a fib of this impulse, guys. Take a fib. What is this? What is this? This is 38. This is 38% retracement, guys. That's what it requires. And why is it 38% retracement? Because it is just an ordinary running flat, which is a sideways corrective structure. It corrects sideways, so it doesn't need to push up. Do you understand? But in Euro GBP, let's go to Euro GBP. We're there. Okay. But in this case now, if you analyze this structure very well, let's go to 1 hour. You analyze it very well. Last week, we had this move to the upside. We had this corrective structure, and we thought this one was enough to push this to the upside before we sell. Okay, but instead, what it gave us is you have this move, you have this corrective structure. Then I said, if you see my markup, I said this is expected. Okay, you have to expect this. It will happen. I said it will happen to the upside. Let me check if I can get such, because you have to learn very well using some of this stuff. Is very, very important. It's very, very important. When you come to Wednesday live session, you don't come there in a hurry. You don't want to go in a hurry, because it is an opportunity for me to show you a lot of things that I know can happen in the market, and you also learn from them. Okay, so it's an eye-opening session. I'm not in a hurry to do it. I'm sorry if you are so busy, you can just excuse. If you have time to stay, just stay, because I'm going to show you a lot of things. You know, I'm going to show you a lot of things, how you should master the chart, what you should do and at what time. And of course, you know that one of the key that you need to have in this market, that was last week, it was brilliant. Okay. One of the key you must have in this market is your ability to know when to trade and when not to trade. Is very, very important. All right. When to trade and when not to trade. If you're able to get that, you will be successful. Right now, I don't need to trade anything again this week because I don't have opportunity to have to do so. All right, let's see it. This is Euro GBP, guys. Can you see? You see Euro GBP? Never see. This is my chart. You see what I was trying to explain to you. When this move happened, I had already seen the daily time frame that I had my candlestick pattern that matter. I have a railroad track, which was in positive move to the upside to catch liquidity and massive flows to the downside. As soon as I spotted that, what did I do? I came to 1 hour time frame, and I told you, I made it clear to you in this chart that I'm expecting this market to come to 50 to 61.8 to come down. But then this, was a tentative, structure, because I have not understood the kind of corrective structure that is going to launch this pair to 50 to 61.8. So I assumed that it was going to be an ordinary corrective structure. But if it turned out to be a bigger, WXY structure or a zigzag structure, then coming to 78% retracement is imminent. And where is the price on 78% retracement? If you can see it, is 0.8686. And what did I tell you in that when I was analyzing where I expected it to reach? 0.8680. Guys, 0.8680. That was where I told you I was expecting it to come. Can you see it? So it's as simple as that, guys. So that's how you go about it. So then somebody will ask me, Nat, if at this level you forecasted that this market will not go to the downside, but it's going to be involved in corrective structure to this level before you say, why didn't you take a buy from here and catch it from 0.8547 to 0.8680? Why don't you take a buy? Okay, so I have to say this again for the purpose of those who are learning new, who are learning this craft now. You don't take it because this is a corrective structure that is meant to go up and down, up and down, up and down, up and down. All right, it gives you a lot of headache. It gives you a lot of, problems. And for people who have hypertension, this is capable of terminating their life. I'm telling you, because if you are trading with, let's say, 10 standard lots, and at the time your profit was $8,000, and at the time $8,000 has remained a negative 2,000. At times you check it, it has gone 14,000. At times you check it within 1 minute, 2 minutes, 5 minutes, it has come down to 2,000. It gives you a lot of headache. So in order to avoid that headache, we want to trade in the direction of the impulse. So if in Elliott wave theory, when you see an impulsive move, there's going to be a replication of that impulsive move that we call continuation move. So this yellow arrow to the downside is the continuation move that is supposed to be a replica of the initial impulse to the downside, to which we have fibbed to 50 to 61.8. Do you get now? So that was how I have made that projection. And as you can see it from here, let's go back to the chart. Okay, let's go back to the chart. You now see how the chart has been. See it? Can you see it from this level? From this same level, guys, it has moved exactly at that spot, and it's going there. So, but I showed you corrective structure that time that I am not God. So there was no way I could have known the kind of corrective structure that will launch this pair to this sell level that we're expecting. But as it is progressing, guys, you begin to analyze. As the corrective structure is developing, you begin to analyze how it is. And based on that, guys, I'm able to see that, oh, we are having a bigger structure here in the middle. Okay, and this bigger structure here in the middle is what we connect this wave and this wave. Simple. So you have 1, 2, and 3 here. You have 1, 2, and 3 here. You have another 1, 2, and 3 here. If anybody remembers vividly, yesterday I was buying Euro GBP. I was buying it, okay? Because although I couldn't give the trade to anybody because this is just a short trade that I can decide to close at any time. And I did close it in small profit, okay? But because it's close to the top already. So, and I told myself, if this pair is close to the area I want, my lot is here at 0.8675. Okay, so if it's close to the area, why will I hold it? I close it. Look at it, it's close to the TP. All right, so when it gets here, you know, top here is what's the price here at the top? That is 0. I'm just giving it. If anybody wants to trade, you can trade it. 0.8732. If you put your stop loss there, let's see how many people will be your stop loss. I don't want it to be more than 50. If this market can get to, wait, let's spot supply level. Okay, it's a very good supply level. If this market can get to anywhere here, 0.8680. All right, if you can get to 0.8680, guys, okay, you can take this trade if you want to trade. All right, you can take it to the downside here. If you can get anywhere in between here, you can take it to the downside. Make sure you put your stop loss at 0.8735. Don't let it to be more than 40 to 50 pips to the downside, guys. So you can take it. All right, let's check. I think that is clear now. And remember that if this Euro GBP is going down crazily, also expect that GBP CHF will start its move to the upside. Why our trade, I had a trade on GBP CHF, why it did not succeed was because of this Euro GBP. Euro GBP had not completed its structure and Euro became stronger. And anything that makes Euro to be strong, GBP will be weak. It's simple. And so when GBP is weak, if you are buying GBP CHF, it's going to fail. That's just it. So why, somebody will now say, if that is the case, why did you go in? All right. The reason why I had to go in was that at times there could be a situation where this C will be a short C and end here. Okay. And here, this side is also a supply zone. So if this was a short C, then this move to the downside will come. So when I was seeing this move to the downside, I said, this might be a short C. Maybe this move is ready. So if this move is ready, then my GBP CHF is ready to the upside. That was why I got in on GBP CHF. But this one now make a move, a corrective structure, and is pushing up. So as it's pushing up, what happened to GBP? If Euro is pushing up, what happened to GBP will be weaker. Okay, and as GBP is weaker, then GBP CHF will go down. That's all. That's a simple thing that happened yesterday. Next is GBP card. GBP card. All right, and I'm also using this opportunity to tell you or to remind us that when you place a trade, all right, when you place a trade, irrespective of the outcome of that trade, you have got a lesson to learn. That is what many people don't understand. Immediately they lose their trade, they just close their laptop and that's it. They don't learn from the mistake. If you are taking a trade, guys, and you win the trade, what happened to your account? Your account will increase. Is that not? If you lose the trade, guys, if you lose the trade, your account will drop and then you learn from it. You learn from your mistake. So as far as I'm concerned, when I'm trading, I am learning, whether I win or I gain. If I win, I'm learning. If I lose, I'm learning. And that is why you have seen me being able to combine a lot of things and put them together as content. It's a product of several years of learning experience, learning curve. So when you are winning your trade, you are learning. And when you are losing your trade, you are also learning at the same time. But this learning, you can see, is two-way traffic. But there are some people, they don't even learn at all. When they win, they jump up, they have won. When they lose, they start crying. And crying, unfortunately, is not going to solve the matter. So how is it a two-way traffic? When you win, you learn. When you lose, you learn. Watch. If you win, you now ask yourself, which setup had made you to win this trade? Once you see the setup that have made you to win the trade, you study the pattern, you study everything. If you see it another day, you trade the same pattern. Okay? And your account will increase as a result. But if you trade a pattern and you lose, you need to ask yourself, why did you lose this trade? What happened? What were you supposed to do that you did not do that made you to lose the trade? Okay? By the time you are able to figure out what made you to lose the trade, then you have learned in the process. Can you see that a trade that you have lost had now enriched your knowledge about the setup? For instance, I said yesterday two things on GBP card. I said the first thing that you should know on GBP card is that we have impulse. Okay. The next thing that you should know is that we are able to have correction and we can define the corrective structure. Can you see 1, 2, and 3? 1, 2, and 3. All right. And the rule says, although the rule say in a zigzag corrective structure, it must come to what? 78% retracement. But do you know why I felt that it might not come to 78? It's simple. In zigzag corrective structure again, there is equal leg rule, that from this leg here be equal to this leg. So when I now calculated it, okay, when I calculated it, when I measure it rather, let's see, fib extension, when I did it this way, drop it here, take it back, drop it here. Can you see? I got my 100 to 123% fib extension here. And if I trace it to the left, it's at demand level. Okay, it's at demand level. So based on that, I was about to put a pending order at this psychological area of 1.5700, but I stopped the idea. Okay, but can you see why I took the trade here? But when this move happened, this one, I say, oh, there's a reaction already. Based on this, I took this trade from here, GBP card. Based on this, there's equal leg between this and this being corrective structure in the middle. Ordinarily, if markets would behave normally, you should have this move to the upside. But as soon as I took the trade, I remember I have to check the situation with oil. All right. And when I checked the situation with US oil, I discovered that US oil is bullish. Okay. And if US oil is bullish, what it means is that CAD is strong. CAD is what? Is strong. Okay. Put that aside. Then Euro GBP. Did you see what was happening to Euro GBP? Euro GBP. Euro GBP was very strong, going up. And based on this Euro GBP, if Euro is going up, what happened to GBP? Go down. So can you see GDP GBP go down, and then CAD go up. CAD go up. Do you see? So if GBP is to go down and CAD is to go up, what happened to GBP CAD? GBP CAD will come down. Immediately I saw this, I had already sent the message. All I had to do was to say, look, take lower risk, number one. Number two, remember that we want oil to come down, because at the level it was yesterday, it has taken this top, it was in the supply area, it will also come down. That if oil comes down and Euro GBP comes down, that is the only condition that will make GBP CAD to what? To buy. Because if oil is coming down, it means CAD is weak. And if Euro GBP is coming down, it means GBP is strong. Therefore, a weaker CAD and a stronger GBP will guarantee a strong buy in GBP CAD. But right now, can you see, we have a stronger CAD, okay, and a stronger Euro, meaning a weaker GBP and a stronger CAD. What will it produce in GBP CAD? Downside. That is why right now, if you go and check GBP CAD, if you go and check GBP CAD, it's massive downside. Can you see now? It's downside. So without much talk, two instruments that I use to determine the next move in GBP CAD is I look at Euro GBP and what? And US oil. I'm okay with this. And US oil. That's all. If I get this analysis of what is happening in these two pairs, if I get it correctly, and there's enough volume in the market, it's not likely I go wrong on GBP CAD. All I want to see is the setup. Right now, there is a setup. Somebody will ask me, now, does it mean that the fib level is strong? No, it's not wrong. It's not wrong. What is there is that the retracement of this impulse is probably going to come to 78% retracement here. So what I need to see before I take this trade is simple. I want to go back to daily. You see that it is massively selling to the downside. All I need to see is that I want to see engulfing candle here. This engulfing candle here is the one that will signify a buy pressure, okay? And as soon as I see the engulfing candle on daily time frame, I can now move. You understand the system. You can now move to 1 hour time frame. When you get to 1 hour time frame, you must have seen an impulse. All right, you must have seen an impulse. Let it correct to 50 or 61.8. Then we now buy to the upside. This is the only condition that's going to make us to buy GBP CAD. Apart from this condition, we're not going to buy it. Are we okay now? So the same thing is applicable to Euro CAD. Of course, I've told you yesterday that there's no need for you to look for buy opportunity in Euro CAD, because even though it's buying, it's still going to flush down because Euro is terribly in bad shape right now. Guys, do you have another pair you want us to take a look at that you want me to look for you? Do you have any other pair? Okay. Do you have any other pair you want me to take a look at? If you don't, I'm going to end the session because I virtually don't see anything happening in the market. Where market is consolidating, you don't feel too comfortable, analyzing it. But if I can give you a setup now, tell you this is what to expect, this is what will happen. Yeah.
And the thing I want to ask is that in that Euro GBP,
yes,
where you have set up your alarm,
yes,
for, as in whenever they reach that place, you are going to sell it.
yes.
I think that maybe shall we also set a sell limit there, or we should not? We shouldn't.
What I want you to do is this. So what you are going to do here is simple. What I want you to do is this. Let this pair continue to work itself out. Let it be working itself out. Let it be working itself out. You're going to get to a stage where you are going to see another engulfing here. Daily engulfing. Okay. You are going to see it. Daily engulfing candlestick. You are going to see it. Okay. That's what will show you. That's what is going to show you that there is a selling pressure. That selling pressure has been introduced into the market. If you place a sell limit here, because of low volume we're experiencing right now in the market can get there, begins to play with your trade, push you up again. So what are you going to say that time? So I am waiting patiently. In fact, I'm promising I'm going to give this trade to everybody. I'm going to give it to everybody. Let's wait. Do you see what happened here? You see what happened here? You want a repeat of what happened here to happen here. Boom. But in this case, as soon as it happened here on daily time frame, after this green one, this big red one happens. As soon as it happens, guys, it tells me that, oh, now there is volume in the market. There is sell pressure right now in the market. So all you have to do is, when this happens, go to 1 hour, you are going to see your impulse. Let it correct to 5061.8, take the trade that time. Do you understand? So if you set sell limit here, it might take you there, play with you next week, Friday, and then still push you up again. You lose. After you have lost, push you down. Do you understand? In order to avoid that, just leave it. Leave it on daily. Leave it on daily. And I can see that many people also have the problem of, only working on their entry time frame. That's where you see them put the chart. But I found out that it makes you to, quickly enter the trade, without proper analysis. Always ensure that you leave your chart on the higher time frame. It is only when the higher time frame fulfill its structure that you are supposed to step down. If you have not seen it fulfill its structure, don't step down. All right. For instance, now, until I see that engulfing has appeared here, all right, until I see that this market has gotten to the upside here, and I've seen that I've gotten this candlestick that pattern that matter here, that when it is complete in daily time frame, that is when I can say, oh, tomorrow we are going to look for sell opportunity on Euro GBP. And in that case, I'll take it to 1 hour that tomorrow. Okay. And you see that tomorrow you will have seen a sell pressure here. That engulfing you see will create an impulse in 1 hour. That's the one you now be waiting for at the top here to sell. Do you understand now? So that's how you are going to do it. Unfortunately, this market is just consolidating, remain in one place for so long, and it's not allowing us to make as many pips as we are there wanted. Okay, so let's look at DXY again before we go. So can you see? Nothing will happen, guys. Nothing will happen in this market as long as this one is consolidating. Look at the bigger consolidation. Look at the smaller consolidation. As long as this is happening, don't waste your time. Any trade you place in the market will not likely do well. It has 90 to 95% probability of failure if you place it, because there is no volume. And how do I know there's no volume? DXY is consolidating. That's all. Any other question for quality day? NZD, somebody say NZD JPY? Okay, let's look at NZD JPY. NZD JPY. Monthly. Let's go to IDC. IDC will offer us a better data. Okay, monthly bullish. How do I know that is bullish? Okay, you see, this is a straight move down. 1, 2, 3. 1, 2, 3. What do you expect next? 1, 2, and 3. Can you see? Effortlessly. Effortlessly, guys. Very clean setup. You now have this wave down. This one that comes down here will now come here. Can you see? Then this one that goes up here will now come here. That's how to do the forecasting. Simple. Very easy, guys. This is the structure of NZD-JPY. What will happen in NZD-JPY in 5, 10 years to come? I forecasted it here for you. Look at here, it says year 2000. It has been here. This is what will happen. If you like, screenshot this, markup and save it. Save it. And in 10 years to come, if it does not happen like that, let us know. That is the theory, not me. Okay, so you now ask yourself, where are you at this stage? Can you see that this wave is almost gone? You want to see a correction of NZD-JPY. You want to see a correction before you see a push-up. That's what we want now. So you now go with that mindset to weekly time frame. You want to see a correction. And of course, you can see that we have some element of correction here, push-up. Anytime you have a push-up, corrective structure, push-up, and you're having a push down, forget it. You are going to have a correction that will push down. Break this low before you proceed to the upside. That is structure. When you hear market structure, this is what is called market structure. You understand? So now, what are you expecting here? You are already seeing, you're already seeing that you have already seen in monthly that we want a correction down. Okay, and on weekly time frame, you are seeing element of that correction happening here. Okay, so if that is the case, let's go to daily time frame. We want to sell. Okay, we want to sell, and right here, guys, we are seeing a sign that we are getting ready to sell. Okay, we are at the top, are getting candlestick that we are getting ready to sell. So ordinarily, after seeing this candlestick pattern here, you go to 1 hour time frame, you should be able to spot an impulse. Can you see? But immediately this impulsive wave happened and happened correctively, I did not have confidence in the analysis. You see this 1, 2, and 3. When it comes this way, I knew this was going to go up, either correctively or impulsively. Okay, and then what do you see? 1, 2. No? Watch. See, this has become a corrective structure. Can you see? Why did I quickly get this thing? Somebody will ask, you were trying to do it in another way. Why did you change your mind? Because I look in the middle here and I see a clean 3-wave structure. It is this clean 3-wave structure that changed my mind. Can you see? 3-wave structure in the middle, with A here must be impulsive, and then with C here must be impulsive. Simple. Can you see? And I have my what? 3-wave structure here, 1, 2, and 3. Was somebody aware that I was buying, what do you call it, NZD-JPY early this week? Yes. This was what I saw, and I was buying it at this level. And I've closed all my trades. Okay, close all my trade. I'm not interested this week. Okay, so my expectation is simple on this pair. I expect this to make a push to the upside. Okay, and to what extent should the push come? That's where you have to use trend-based fib extension from this level to this level, back to this level. So, sorry guys, I expect it to get here before to push down. Okay, and let's check by fib retracement of this whole length. three waves to the downside. You can see that the formation of this structure is a zigzag corrective structure, and it's supposed to end at 78. Can you see we projected to end here? The two corresponds. Okay, I'm going to end at 78% fib retracement. Okay, that's all. So, and on getting here, we expect it to make a move to the downside. What move to the downside? This one, whether three waves or whatever, we just want a move to the downside. Maybe we also form it. If you form a three waves to the downside, it means that this wave here, this one here, will be treated as an impulse instead of the middle wave, will be treated as an impulse. So this will have been the wave that corrected it to the downside. Okay, and it's going to end at should likely end at 78 because it's zigzag, and then after that you see this move to the upside. Okay, let's remove this. So when you see this move to the upside, the next thing you have to think of is that this one has become wave A, this one become wave B, and this one become wave C. This is A, B, C. That's a correction. Correcting what? This move down. That's all. What do you expect here? This move down. Okay, so this one will be A in bracket. For this move down, this is 1, 2, 3. A, B, C, and that is B in bracket, and this is C in bracket. Can you see it has become A, B, C move? Correcting what? Correcting this move in yellow, correcting this move in yellow, and then for every impulse correction, there must be continuation. This move in yellow. Proceed to the upside. Simple, guys. This is the forecasting that I'm seeing in SZDJPY, but you must take it one piece at a time. One piece at a time. One piece at a time. How do you take it one piece at a time? You must wait to see this go up, reach this level. Look for sell opportunity to the downside, reach this level. Look for buy opportunity to the upside, go this way. That's how you take it one piece at a time, one piece at a time. But at the current level, this pair is not expected to come down. It's expected to move up to complete the structure, because this wave is done. We need an equivalent wave here. Is that okay now for the person that asked question concerning NZD-JPY? This is my expectation for now. Is there any other question? Any other question? Okay, so no other question. So I see you next week for another interesting edition of Wednesday live session. Please stay clear of the chat if you can. If you need to practice, just practice. But you need to trade, you have to be careful for the week. In fact, next week, you have to be careful too, because after this week is over, you will still be battling with NFP week. NFP week is also very slow and sluggish, and markets do go up and down. But this week particularly is second most dangerous week to trade in the whole year, because it is the last week of the first half and the second quarter of the year. All right, so enjoy your day. I see you next time. Bye.